Pieter Vergatini.
8 tot 10, Smile, 90.4 FM.
Joining us to unpack how a small window of opportunity could get South Africa's economy back to building back better is the guest lecturer at the University of Stellenbosch Business School, Jason Hamilton. Mr. Hamilton, good evening and thank you so much for joining us.
It's a pleasure and thank you for hosting me.
While the country had experienced a healthy and strong bounce back from the economic contraction of 2020, recovery still remains quite fragile, indicated by the downward revision of the expected GDP growth as announced recently by our finance minister to below 5%. What is that potential impact, do you think, Jason?
Well, I think with that context, I think it's important to reflect and just know that we're still seeing or forecasting growth. So I think it's important to note that we are seeing an improved trading environment from what we've experienced the last 2 years. And if we're looking forward at the growth forecast to 2.1 and 1.6% projected for 2022 and 2023, although we have to note that the IMF is projecting slightly lower levels, we're still seeing growth projected over the medium term of 1 to 2%. But then also, if we keep in consideration a global context, globally we're projecting 4.4 to 3.5%, and in sub-Saharan Africa at about 4%. So this context, we can see that South Africa is not really seeing the strong and robust recovery that we all hoped for, but we are seeing growth. And based on our last 10 years, this is very welcome to see.
What do you think, Jason, will accelerate that growth? What can business do?
I think business has a big role to play, because everybody always focuses on what government and public sector can do, but I think the private sector has a big role to play. And I think to a degree also from what's within their control. So companies, I think, need to realize that they can't really trade and be managed as before. So it's not enough to simply just scan the environment for risks and then react to that. Those businesses need to develop this capability to react and adapt to change. And unfortunately, with the pace of change increasing, they need to develop that capability to do this at pace as well. And I think this also then requires companies not to view themselves in isolation, but then to see themselves as part of a much wider, interconnected ecosystem, and also then an active participant within that society. I think also we can see this focus that companies are taking from a capability point of view coming through in how they've reacted to innovation. So innovation and technology isn't just being applied merely from an automation or efficiency point of view anymore, but technology is actually being applied as a business model itself. And we can see this then with the development of open networks and the network and platform business being developed. And again, we saw this also then the shift continuing from efficiency and effectiveness to that of sustainability and robustness. And again, this played out and is playing out currently also with the supply chain disruptions we saw and continuing now to see because of the geopolitical risk. So this focus of companies on their capabilities, I think, is something crucial for leaders and business owners to take into the future.
Just around the adaptation of the technology, and do you think now would possibly be the time, because the adaptation was quite swift and rapid owing to the demands, but do you think it would be prudent now to almost take a step back and to review, for example, one's digital and innovation strategy?
I think it is an opportune time. I think probably if you're starting to do that now, you might be a little late, because your competitors probably has done this over the last 2 years, and all of us were forced to relook at that. But one thing I can say on that is that you definitely need to take a strategic approach to that. And when I say strategic, I mean a thought-through approach, and it has to then align with where you want to take your business over the next 5 to 10 years. So from that point of view, yes, it is an opportune time, but I think, as we mentioned, it's also not just focused around technology for the sake of technology. It is around how you're choosing to compete in the market that you are targeting, which again brings us back to the strategic discussion and this discussion about strategy and around capabilities, as opposed to just the deployment of technology, because this thing links to everything in your organization, from your employees, to your culture.
Yeah, and how will, say, debts impact upon strategy? Because it's not just the government who are struggling with debt owing to COVID and the demands placed upon businesses. Debt levels have increased. How should companies view that?
I think companies, and this again comes down to that flexibility and the ability to adapt to change or then future and further shocks, because the reality is, and as we saw now, we had the pandemic. Yeah, out of the blue again, we have this geopolitical risk, which nobody really thought would impact us now, or it was at least one of the options, but here it is true and happening. So these shocks are going to continue, and I think, as we saw, companies have emerged from the pandemic with significant debt, like most governments as well. And as governments has reduced their debt levels, companies need to follow a similar strategy. So reducing debt levels in itself provides companies with the flexibility then to have a capital structure which can more easily absorb or react to certain eventualities. But also from an opportunistic point of view, if you're flexible and you've got a flexible capital structure, you can actually take on opportunities when they then do present. So I think what we will see happening, and we saw this globally too already the last 2 years, is companies will start selling off non-core assets. They will start exiting certain share positions and using the proceeds to reduce debt. But ultimately, this also then providing them with this flexibility, and this rationalization process in itself will also unlock value for shareholders and stakeholders because of this renewed focus.
Joining us in conversation this evening is Jason Hamilton. He's guest lecturer at the University of Stellenbosch, providing us with some insight on what government can do more to allow businesses to feel comfortable enough to participate in the economy, and how that, particularly our growth, can be accelerated. You're welcome certainly to share your thoughts too on 0829 904 904. You spoke about the new risk within the global geopolitical situation, the Russia-Ukraine war. How does this impact around energy and food security?
I want to say almost all or most risks, I think, can always be managed or mitigated. It's just a question of time.
Okay.
So I think, yes, we know there's a lot of energy, and Russia does provide a lot of energy to the world. I think short term there might be slight pain, but given time, I think globally this can be absorbed. It's not like South Africa isn't used to having energy problems. So I think from our point of view, we'll probably be able to weather that relatively okay. And then again, we've got alternative sources of power as well. I think one of the big ones, though, is the agricultural angle to it.
Yes.
There is a lot of exports, not in total, but on the agricultural side, I think there's quite a lot of exposure from your fruit exports, specifically, I think citrus that goes to Russia. So there's definitely some pain going to be felt there until either the market opens again or alternative sources are found. But from a food security point of view, I know a significant amount of wheat gets imported. So there too, you'll probably have some short-term pain. But again, it's not like South Africa doesn't produce our own product as well. So at least we've got a strong and healthy agricultural sector. So I think there might be some short-term pain. I think the longer-term impact, though, in general is inflation. I know we also come from an inflation environment, but globally we've seen for the first time elevated inflation levels and pressure coming through. And the geopolitical risk we are seeing is definitely going to make that's going to be sustained for much longer, and it's going to impact supply chain constraint impact for also much longer. So, and again, we're talking about this, that these things that we see as risks that we are managing as a country, but also then as the globe. These things aren't going away as quickly as we'd like to. Which again, if we look at COVID, is something we also thought was a 6-month issue, now been 2-3 years. So again, we need to be aware and manage ourselves within that environment. That This is going to be recurring things happening.
It sounds like if we distill down to the domestic household budget, that the tightening of the belts will continue for quite some time, as you described there.
I think so, but this is also where growth is so important. So I think the concerning part, and we mentioned this already, is this 1 to 2% band, which is actually extremely low. It's growth, yes, and if we do get to a 2% growth, it's higher than what we've seen historically. But we need to get to much higher figures than that. So we in theory have a 2 to 3, maybe a 4-year window where the pressures we are seeing globally is playing into our favor, because we are seeing food supply demand is still there, but we are seeing elevated prices on the commodity side, and demand being sustained or being elevated and now being sustained for a bit longer because of some of the complexity we are facing. And we've seen the effect of that. I mean, SARS has collected more than they anticipated, and that obviously flows through to meaning companies are also doing well, or at least doing better. So this window we need to make use of. So from a public sector and a private sector point of view, while we have this window, we need to make some pretty crucial and critical decisions while this window remains, because it won't remain open forever.
Yeah.
And at that point, we need to be ready and positioned well to take advantage of any growth opportunities beyond that.
Do you think we are in that position?
I don't think we're there right now, but I think we are doing certain things to get there. So I think we have seen government talk about reform, and there has been reform put in place. So again, we can just refer to SARS. SARS seems to have rebuilt the capability to be effective and collect tax. And so we're seeing reforms taking place. We're seeing certain things happening with Econ already, although in general the SOE still remain a concern. So again, there's a crucial 18 months there. But seeing this action coming through is helping with sentiment from an investor and from a consumer point of view, which is the most crucial thing.
Yeah.
However, we need to focus now on effective and efficient implementation. But I think we also saw from the rating agencies that there's some positive news coming on that side, where it looks like we're probably not facing a further downgrade, which already saying we are doing the right things, but we need to start implementing now. We need to start securing our energy. So these renewable projects coming on board, certain infrastructure spending, etc., it's all not short-term projects. So yes, short-term pain, but there's a medium-term good story, but it comes down to effective and efficient implementation.
As that phrase once again, that effective implementation, it boils down to that. You can have the best laid plans, but you got to walk the talk, so to speak. Jason, I mean, further to what you've been saying, and particularly encouraging, what else can government do to allow businesses to feel comfortable, to feel that they're part of this ecosystem, to participate in the economy?
I think a thing we already saw, and unfortunately there's not much detail yet, but government did highlight that they need to make it more easier for businesses to trade and look at some of the red tape. So again, it's good to hear this narrative come to the fore, but we need to now look at some of that detail and look at the timelines. I also think another big thing, although it's probably more a gesture than anything else, is the tax rate for companies that's been reduced from next year from 28 to 27%. I think that's also something which is positive. I mean, it does mean more money in the companies' pockets to also then spend, to use for research and development, and even just to cushion some potential blows coming forward. Even if that extra money freed up through that is even just distributed to shareholders, it still means that it's being able to circulate back into investment or back into spending. So even from an institution point of view, any money flowing from companies, and we have seen this recovery taking place, we're seeing pretty decent recovery at the corporate level happening. If that then starts filtering through into the economy with some of the incentives government put in place, again, there's a potential for a good story brewing.
Lastly, with all of the plans and from what you've been saying, how can this positively impact upon that unemployment figure, which seems to be growing, Jason?
I think the unemployment figure is probably one of the most serious things we are facing. And again, this is something which unfortunately we need short-term action on, but we also know that things take. Everything we see today also is talking about a immediate to long-term plan. Because unfortunately, people need jobs now, people need to eat now. So this is something that definitely is going to have to be a balancing act. And the balancing act is where the leadership skills from a public and private sector comes in. But this is, again, where private sector needs to also, I think, take on a different role. We saw how companies and individuals started reacting like a community, like a society, saying almost no one will be left behind. And I think that attitude we mustn't forget. We need to still remember that and to let that ethos carry us forward. So I think this is where society and treating even companies seeing themselves as citizens of a wider ecosystem becomes so important, because ultimately your workers and then the unemployed is ultimately your current or future customers. So we aren't disconnected from each other. So there's definitely, I think, interventions from even the company sector that needs to be considered, and something we haven't seen before. But yeah, the unemployment figure where it is something that I think if we put the plans in place now and take advantage of the next 3 to 4 years, can put us on the right trajectory to start reducing that. But we're talking about probably a generation here. So, and unfortunately, nobody wants to hear what's going to happen 30, 40, 50 years from now. It's a question of what am I doing in the next 2 or 3 years? And that, unfortunately, there's no easier answers for that.
Jason Hamilton, guest lecturer at the University of Stellenbosch Business School. Appreciate your time.
Thank you so much.
Beter musiek.
En meer daarvan.
En meer daarvan.
Smaak 90.4